Hey everyone, today we're going to be talking about the company and the stock Nokia NOK. So we're going to be talking about whether Nokia is a buy, a sell, whether it's crashing. That's what we're going to be talking about in this video right here. So make sure you guys smash that subscribe button, hit that like button, check out my other videos on Nokia, and also make sure you guys look forward to my new videos that I'm going to be making for Nokia. So
I just made $5 million. $5 million. That's $5 million the past month investing. As you can see, I have more than $100 million. Subscribe to my channel so I can teach you how to make millions.
Let me tell you about my day so far. Coffee in Paris, surfed the Maldives, took a little nap on Mount Kilimanjaro. Oh yeah, and I got digits from this Polish chick in Rio. And then I jumped back for the final quarter of the NBA Finals. Courtside, of course. And all that was before lunch. I could go on, but all I'm saying is, I'm standing on top of the world.
Hey everyone, today we're going to be talking about the company and the stock Nokia NOK. So we're going to be talking about whether Nokia is a buy, a sell, whether it's crashing. That's what we're going to be talking about in this video right here. So make sure you guys smash that subscribe button, hit that like button, check out my other videos on Nokia, and also make sure you guys look forward to my new videos that I'm going to be making for Nokia. So without no further ado, let's get started. So when we look at this company, we can see from since 1994, we can see there's quite a few bubbles that it had. Like we can see around in the tech bubble, it bursted and it came back down, and also in the housing market crash, it went all the way up to around the $38 range, and it fell all the way down to close to $2. So pretty much Nokia became essentially a penny stock, and now it's been slowly been increasing when we look at the 1-year chart, but when we look at the 5-year charts, kind of looking like it's been going down. So essentially this company is see, when we look at the 3-month chart, it's been going up 9%. Look at the 1-month chart, down 1%. So in the very short term, we're looking at a downward trend. From the very long term, it still has increased from its 1994, but when we compare it to its peaks, it's quite low. This is actually a low point for Nokia, and it doesn't seem to be making much moves, as we can see in the past 5 years. It's actually went down 20%, 20.24%. So that's what we can see with Nokia. We can look at the earnings per share in the negative range, the PE in the negative range, but it's expected to turn things around moving forward. And so this company is hoping to eventually move on to making more money. We can see that this company does offer dividends, but the problem is this company cannot afford its dividend. So who knows how sustainable that is, and whether or not it's going to keep bringing the company down. So when we look at the inflow, compared to the outflow, we can see the outflow is looking larger than the inflow. So this is bad news. When we look at the news, we can see that there's not much major news in the short term with Nokia. Will things turn around when 5G comes around? That's the question. The issue with Nokia is, even though they came out with their what was it, 52 megapixel camera, the problem was the software kind of sucked, in the sense that it wasn't like an Android or an Apple or anything like that. So it had a fancy camera, but a sucky interface. So when you look at the analysts, 13 analysts, among the 13 analysts, you can see they're looking at this company as a buy. 2 of them look at it as a strong buy, 5 of them as a buy, and 6 of them as a hold. And when we look at the lows, we can see the lows are looking at we can see that this company is right now currently in the low range, the average range all the way up to the $7.22 range, and this company still has ways to go to meet its average, and also it has a lot of ways to go to meet its highs, at least $3 increase. So we can look at that, we can see that there's a golden cross over here. So essentially this company has the potential to quickly become bullish. But when we look at the support and resistance and analysis, we can see actually this company is more of a sideways company. Sideways, look at it. So it's gonna go sideways. So when you look at the financial forecast, we can see actually in Q4 this company seemed to have been doing good in the Q3 and Q4 of 2018. But when you look at the first and second quarter, this company doesn't seem to have been doing that good. Over the years, we can see there's a zigzag pattern when it comes to the earnings per share. The revenue slightly increased 2015 to 2016, but then it became steady. So when we look at the balance sheet, the BPS, we're looking at a sort of sideways movement, and also with the net asset value, with the cash flow, we can see that it's actually in the negative cash flow. So this is not good. But with the Q4 and Q3, it was looking good. So we have to wait and see for the first quarter of 2019. When we look at the capital expenditure, things are looking good. It's actually been increasing. This is the only positives we can see so far. When you look at the rate, the return on equity, we can see that essentially it's been going down, and same with the return on assets. So these are not good. And when we look at the income statement, we can see that the net margin has increased while the net income is still in the negative range. But Q4 2018 things seem to have turned around. So the revenue looking decent. We can see that the total liabilities of this company doesn't have too many liabilities, but it also doesn't have too little. So we can see that the net asset ratio is slightly into the increase. We can see that the financing and also the operating has been going down into the negative range, while the investing aspect of this company seems to slowly be moving up. Same with the operating. The operating after Q3 seems to switch and increase, and this is looking good. So the operating is looking good with this company, with Nokia right here. And we already know what Nokia is capable of. Nokia is Finland-based company. Most people don't know about this. Based in Finland, engages in the network and internet protocol, infrastructure, software, and related services market. The company's businesses include Nokia Networks and Nokia Technologies. The company's segments include ultra broadband network, IP networks, and applications. And Nokia Technologies, the ultra broadband networks segment comprises mobile networks and fixed networks operating segments. The IP networks and application segment comprises IP optical networks and application and analytics operating segments. The applications and analytics operating segment offer software solutions spanning customer experience management, network operations and managing communications and collaboration, policy and charging, as well as cloud, Internet of Things, security and analytics platforms that enables digital services providers and enterprises to accelerate and optimize their customer experience. The company has Comptel among its subsidiaries. So when you look at, we already know that it's in the communication and technology sectors, and we know the chairman, Risto Salamasa, the independent director, the chairman, management, president, chief executive officer, Rajiv Suri, vice chairman, independent director, Oliver Pero, chief financial officer, executive board, Christian Polala, Chief Operating Officer, Executive Board, Jorge Erlemeyer, and we can see that actually the institutional holdings is looking like a mix over here. And when we look at Nokia compared to the S&P 500, we can see that if you would have started with $10,000 from 1995, you would have a lot more in the Vanguard S&P 500 index. So essentially, the S&P 500 makes more than Nokia. And we can see the graph over here. The blue one is Nokia and the red one is the Vanguard 500 index. So the Vanguard 500 index is a lot more stable. It's very stable. It's like steady gains. There's some drawdowns, but steady gains for the most part. Especially during its bull runs. Like its bull runs tend to be like twice or three times as long as its downturns. This could tell me that it's possible that our next downturn could be like 3 years long or 4 or 5 years long or something like that. So the next stock market crash could be scary, but don't let me scare you guys though. I'm only speaking possibilities. Maybe it won't be as bad, the next stock market crash, you know? So maybe things are a little different nowadays, right? Who knows? Anyways, when we look at this, the CAGR, we can see that the S&P 500 grows on average of close to 10% actually. Close to 10%, the S&P 500 grows on average every year. Inflation adjusted, 7%. While Nokia inflation adjusted is only about 4.65%, while without including inflation, it's close to a 7% gain a year on average. That's on average, but we can see Nokia did have some dramatic increases in the past during the dot-com bubble and also right before the housing crash. So maybe it'll have another bull run and you could get rich really quick. If Nokia goes to its glory days of the dot-com bubble and also close to where the housing crash was. And so if you invest 10,000, your 10,000 can hit like 200,000 if it ever reaches towards his dot-com bubble or the housing right before the housing crash. Its glory days. So if Nokia reaches its glory days and you invest like 10,000, it'll be like it could potentially hit 200,000. That's if this company turns things around. I'm not saying it's going to go back in those days necessarily. Nokia needs a phone that can compete with the Apple and also with the Google, the Androids. So that's what Nokia is up against. And we can see if you invest like $1,000, then your $1,000 could turn into essentially like 25,000 or 20,000. So if you put $1,000 into Nokia and it does a big game changer, right? You could potentially, your 1,000 can potentially turn into 20,000. It's not bad. It's not bad. That's only if Nokia steps its game up. You can see the standard deviation at 45.25%, while the Vanguard 500 index is at 14.63%. The best year of Nokia is at a 250% increase. That's the best year. While the Vanguard 500 since 1995, the best year is at a 37.45%. We're looking at the worst year. We can see that Nokia's worst year is about 60% downturn, while the Vanguard is close to a 40% downturn. The max drawdown of Nokia is a 94% drawdown. Whoa, 94.58% drawdown. While the Vanguard's biggest drawdown was close to 50.97% drawdown. That's crazy. We could see the Sharpe ratio and the Sortino ratio of Nokia looking poor, a lot worse than the Vanguard 500 index. We're looking at how correlated with the market it is. Nokia is about 50% correlated with the market. So there you guys have it. Thank you guys for watching this video. Make sure you guys smash that subscribe button, hit that like button, and stay tuned for more Nokia videos. And check out my other Nokia videos that I made before this, and let me know what you guys think. In the comment below, let me know what company and stock you guys want me to go over. Thanks for watching. Don't forget to smash that subscribe button. Hit that like button. Thanks for watching.